Financials are the second best performing sector since Donald Trump won the election, and the regional banking ETF is up more than 11% in that time. Investors are betting that Trump's nominees across the board will be more business friendly on a range of issues like M&A and capital requirements that would boost banking profits. So joining us now is Randal Quarles, chairman of the Sinosure Group and a former Fed Vice Chair for Supervision. It's great to have you on. Welcome back to the show.
Thanks for having me. Good to be here.
So I want to start right there, and that is banking regulations, financial regulations. You were instrumental in overseeing that process when you were at the Fed during the first Trump administration. What do you expect to happen there now? How does all of that play out in terms of that scenario?
Well, I think the first likelihood is that the capital rule that the Biden administration regulators proposed about a year ago is unlikely to be implemented in that form. I think there will be sort of a significant revision to what's done in capital regulation, probably something more along the lines of what we left on the shelf when I left 4 years ago. I think beyond that, you can expect that the supervisory process, separate from the regulatory process, but the day-to-day interaction of the bank examiners with the banks will probably be more constructive. Not a light touch by any means, but certainly, and particularly with respect to regional and community banks, one that's less adversarial and more intent on finding what the issues are and addressing them in a responsible and non-dramatic way.
Do you think we're going to see more consolidation within the financial sector in light of this?
Oh, I think up to a point. The existing administration had a bias against consolidation that I think was probably too strong. We certainly benefit from the fact that we have a very differentiated banking sector in this country. We don't have a handful of large banks as you have in Canada or in many European countries, and that allows a broader range of particularly small businesses in America to get bank financing. That's a good thing, but there is plenty of room for further consolidation and probably a need to ensure a strongly competitive industry, and that we have institutions that are of a size that they can make the investments in technology that are required for modern banking.
Randal, good to see you. So there are rumblings that Kevin Warsh might be up for Fed chair when that seat becomes vacant, which Powell says won't be soon. What do you think of the prospect of Warsh as Fed chair?
I have a high opinion of Kevin Warsh on policy issues. We think very much alike. I think that he would be a good Fed chair. I've seen in the news as well that he's being considered for Treasury Secretary. He understands Washington. He understands the economy. I think he'd be good in both those roles.
Now, taking it to a little bit more of a technology topic, assuming the Trump administration proves to be as crypto-friendly as the campaign was, what opportunities and challenges might that present for the Fed?
Well, I don't know whether you'd call this a challenge or not. I think it's an opportunity for the Fed to play its part in a comprehensive government approach to creating an appropriate framework for crypto in the financial system. I think there's a strong, a very solid bipartisan agreement on what that sort of a framework would look like. There have been bills that have been put into Congress that would implement it. It's been stymied a bit by the attitude principally of the SEC in the current administration. And I think when you see a change there, you can pretty quickly see a change in the environment for crypto that will address all the reasonable concerns that the official sector might have while allowing more innovation in that area.